Buying a home in Connecticut or Florida? Choosing the right mortgage can save you thousands in interest and fees, but how do you know which one's the best for you? I'm Robert Weinberg, and today we're breaking down mortgage options in Connecticut and Florida, comparing key loan programs, interest rates, and qualification requirements. By the end of this video, you'll know exactly what to look for in a mortgage, whether you're a first-time homebuyer or a seasoned investor. Mortgage programs can vary greatly by state. Connecticut typically has higher property taxes, while Florida offers lower taxes but higher overall closing costs. These are important factors to consider when budgeting for your home purchase. For those considering down payment assistance, both Connecticut and Florida have state-sponsored down payment assistance programs for first-time buyers. Florida has some additional incentives like Hometown Heroes for eligible buyers, and Connecticut has CHFA, or the Connecticut Housing Finance Program, to help with down payment and closing costs. Many banks also have specific down payment assistance programs, which are eligible in both states. Let's talk about the main loan options available to you in both Connecticut and Florida. Conventional loans are perfect for buyers with a strong credit history and a solid down payment, and these loans are widely available through both states. FHA loans are ideal for first-time buyers or those with lower credit scores, higher debt-to-income, or minimal savings. VA loans are excellent if you're an eligible veteran, active service member, or a surviving spouse, as VA loans offer really low interest rates as well as zero down payment requirement. USDA loans are for rural buyers that allow you to buy a home in an eligible area with no down payment. And many regions in both Connecticut and Florida qualify, so don't overlook this possibility. Eligibility for USDA is based on both geographic location of the property as well as income limits. Jumbo loans are going to be for high-cost homes in higher-cost areas and are widely available for both Connecticut and Florida. Did you know lender requirements can vary between states? Here's exactly what to expect. While the baseline requirements and guidelines for credit score and debt to income are the same, certain properties in either state might be more difficult to qualify for because the home is in a high-risk area like a flood zone, requiring higher insurance costs, which can affect your debt to income qualification. Florida often requires additional insurance coverages, which can impact your overall cost, and meanwhile, Connecticut buyers need to plan for higher property tax costs. Condominiums will have a much stricter approval process in Florida, specifically for conventional loans. There's specific guidelines that are only for Florida condominiums, which can sometimes require a higher down payment in order to get the homeowners association approved. Getting the best mortgage terms requires a bit of homework. Here's exactly how to do it. Working with a mortgage broker is recommended, who's licensed in the state where you're buying property, to help uncover the best opportunities from multiple lenders without needing to have your credit run multiple times. Optimize your credit score before applying, or strategize with your loan officer on what you can do to get into a higher credit bracket, which can lower your interest rate and loan costs. Consider different loan program options. Many times a government-backed loan, such as FHA or VA, can have a lower interest rate than conventional or non-QM loans. It's always worth looking at your options to ensure you're getting the best loan for your personal situation. Here's a quick story for you. A client of mine named Nick had lower credit, but he was putting 20% down on a new home in Connecticut. And he was thinking conventional would be his best bet, but by using an FHA loan instead, his monthly payment was actually lower by $180 per month. Finally, let's cover some pitfalls to watch out for when securing your loan. Interest rates can be volatile, so don't hesitate to lock in if you're comfortable with the terms. Don't try to time the market. Beyond your mortgage, factor in taxes, insurance, and maintenance costs because these costs can be large and it's important to know about them ahead of time. And consult with your realtor or loan officer for guidance in this area. By understanding these key points, you'll be in a stronger position to navigate the mortgage landscape and secure the best deal for your needs. Choosing the right mortgage in Connecticut or Florida isn't just about getting the lowest rate, it's about getting the best loan for your financial future. Whether you're a first-time buyer or upgrading to your next home, understanding state-specific differences is key. If you're ready to explore your mortgage options, check out my previous video on using a HELOC for real estate investing to learn more about financing strategies beyond traditional loans. Thanks for watching, and I'll see you on the next video.